Well, welcome back, everybody. The Qredible Live broadcast is back for our fall season. So excited to be kicking off with a fantastic targeted webinar on CBD and FinTech, talking about the high stakes in the payment game. And we are joined today by Angela Ross from AMPF Consulting. And Angela, I'm going to let you just kind of introduce yourself, and then we'll talk to Brian, and then we'll get into it.
Sure, happy to. So my name is Angela. I'm a certified risk management professional and certified anti-money laundering specialist. Like saying that one, it's kind of fun. I have a background primarily in payments and operations. So there's a really fun intersection between compliance and operations. So I like to help organizations navigate those regulatory challenges and really set them up for success.
That's awesome. By the way, I had somebody on the show once that introduced themselves as a money laundering specialist. They forgot the anti part. So.
That actually happened to me one time on an airplane when I was sitting next to somebody and told them what I did. And they said it so incredibly loud. I was like, no, the keyword is anti. Like, please add that in there.
That's right. Right. So Angela is not a money laundering specialist.
Yeah, no.
She's an anti-money.
Crucial distinction.
So good
Yeah.
stuff. Great to be back here with a new season, kicking off on a very important topic. I'm Brian Fitzpatrick. I'm chairman and CEO and one of the founders of Qredible. And just great to be back here and have Angela, one of my favorite payment professionals, on the webinar today. So welcome. And I thought maybe we would start, there's you and I always have this discussion about this term high risk, and it's, not a lovely, term to use, but the payment processing industry uses this term high risk, to talk about certain vendors. So I thought it'd be helpful just to set the stage and have our listeners sort of understand, what do we mean when we're talking about this high risk category?
Yeah, high risk typically refers to in the payments industry refers to merchants that require quite more oversight to really manage and understand how to manage those accounts properly. And in addition to these types of merchant accounts necessitating additional oversight, it could be related to the tendency for merchants in certain verticals to have a higher frequency of chargebacks, friction with their interactions with customers. They could have maybe reoccurring billing models, or again, just be heavily regulated. And that means that there's just going to be a lot more for the payment processor to do when it comes to being able to manage these accounts properly.
Now, what's interesting is I know that like nutraceuticals, dietary supplements, and CBD products, which we'll be talking a lot about today, seem to be smack dab in the middle of this high risk category. So one of the things I really want to cover today is sort of, what's going on with respect to the current environment of CBD industry and payment processing, and talk a little bit about the gaps that exist, because we've been hearing these stories like, the CBD merchant loses their Stripe payment processing, all of a sudden they can't do business anymore, right? So
Yeah.
and as we know, that's like the kiss of death when you're in an online business or even a brick and mortar business. So I think a lot of companies kind of fail to plan properly when it comes to procuring a payment processor, let's say for a CBD or dietary supplement company. So, what, from your perspective, what are some of the common mistakes that these merchants make with respect to choosing a partner, and how can a fintech provider and a merchant sort of avoid these pitfalls?
Yeah. Well, there's a lot to navigate there. One example that we were actually talking about the other day, and I think that's a great one to get in front of the viewers, is there's a difference between a merchant who knows that they're in a high risk vertical and they're selecting a payment processor from the get go that can properly support their business. And I'll circle back to that. But what we frequently see, which is really challenging for business owners and really unfortunate when we see it, is you might have a business who's maybe a bakery, and this bakery goes to their community bank, they get set up with a merchant account, and they're up in processing, or even one of these out of box solutions, and they decide they're going to add CBD cookies to their menu. And the next thing they know, their payment processor is letting them know they can't have that merchant account anymore because they're selling something that has CBD in it. Now, they might have a point of sale system, online ordering, all of these different components, and they have to go find a new payment processor, which is a huge expense when you're a small business owner, all because they added a CBD product. Now, you might think, well, why wouldn't they just tell their processor they added a CBD product? Well, that's not necessarily intuitive knowledge when you can go down the street to, your local pharmacy or grocery store or health and wellness store, and you can purchase CBD products. So I think that, a lot of business owners assume that just the sale of CBD products is mainstream and doesn't require this high level of regulatory oversight and really attention to detail that they should be putting into it when selecting a payment processor. If it's a
Yeah.
merchant that's already, yeah, go ahead. Sorry.
No, because I think that there's not always an understanding that there is this high risk category,
Yeah.
right? And there's sort of this thought that all high risk processors are the same, right? Or all processors, not even high risk, but all processors are the same. So if it's a product and it's federally legal, well, guess what? We can sell it. And that's sort of, I think, a dangerous thing to think of, because if it's being sold at Walmart or being sold down at
Hmm.
Wegmans, why can't, we do it?
Exactly. And the answer to that is the bank that is kind of behind the scenes. So most merchants aren't processing directly with their bank; they're processing with the payments provider. But the payments provider is beholden to the bank's high risk or prohibited merchants list. So it's up to the bank as far as what their risk appetite is going to be on whether or not they allow their partners that they license to be able to offer merchant services to be able to onboard these higher risk merchants. Now there are some banks that take merchants direct, of course, but most of the industry is onboarding merchants through independent sales organizations, technology partners, and independent reseller partners. So, taking that into consideration, it's really important for a merchant to understand what the risk appetite is of the partner that they're choosing for their payments, but also where does that partner stand in, kind of the payments ecosystem? Are they with a reseller of a reseller of a reseller? Are they direct with the technology solution? What bank is going to be actually underwriting and reviewing that merchant account at the end of the day, and what's their risk appetite? They should really understand who they're doing business with.
Well, that's an interesting thing, because I have to tell you, when I sort of came into this space, that was really confusing. Like, trying to
Yeah.
navigate these payment providers, like you said, it's a reseller of a reseller of a reseller. Oh, and there's the bank, right? So, like, how do you figure that out? Like, how does somebody know who they're doing business with if you don't know the terminology and you can't look up to say, oh, these guys have their own MID, are they registered? All
Hmm.
these different things. I mean, that was sort of confusing to me when I came into the space, and I can imagine for a merchant, it's extremely confusing because they see payment processing on your business card or your website, and they just automatically assume, oh, this is a bank, right? And they could be 2, 3, 4 away from the bank.
Yeah. Which isn't necessarily a bad thing. It's just, do you know what the relationship is to the person, between the bank and who you're processing your payments with? I mean, there's a lot of great independent resellers out there, but it's just about asking those right questions to know if they truly have control over their program or not, because you want to know who's making the decisions. So Visa actually has a list of registered service providers. So any of the major names out there, like you could go to this Visa link and you can type in Stripe, for example, and they show up, and as well as their registration status. So any of the major players in the industry and anybody who is actually registered to offer and underwrite merchant services is going to appear on that Visa list.
Yeah, I think that's a great point. So it doesn't really matter if they're 1 or 2 or 3 away, right? Because they really are a sales and service organization, but understanding what the requirements are is
Hmm.
very important, because these entities that are in the middle, they essentially have to do the right job on behalf of the bank, and it's the bank that has the requirement of compliance, right? They have a very specific risk management policy, and one of those things is sort of the Bank Secrecy Act, of which anti-money laundering is
Hmm.
certainly part of. Can you just talk a little bit about sort of what some of these Bank Secrecy Act issues are, and why? Because sometimes I think the bank or the merchant processor, if they cut you off, or they're looked at as the bad guy, but all they're doing is trying to stay in compliance with these regulations. So maybe it's helpful to talk a little bit about what those regulations are from the BSA perspective.
Yeah, from the BSA perspective, it's really about knowing your customer and knowing your business. So you really have to prove that you took all of the steps to comply with those regulations and that you can follow the money, right? That's the best way I can summarize it is, do you know your customer? Do you know your business? And can you follow the money?
Right. Yeah, and that makes sense. So that know your customer, or what we refer to as KYC,
Mhm.
is very important, because that means they have to not only know that you're a quality actor in the space, uh, but they also have to know that the products that you're offering. So, we're going to get
Yeah.
into, I think, a little bit of that in talking about some of these vendors that got merchants that got cut off because all of a sudden they've added a violative product that
Yeah.
wasn't agreed to up front. And the example you used was sort of the CBD cookie with the bakery, but there's deeper examples of it's a CBD
Mhm.
company. They know you're offering CBD, but maybe they don't allow Delta 8 type products, right? Maybe there's
Yeah.
vape products they don't allow. And that's sort of some of the stuff that, you can get in trouble with if, you choose the wrong payment processor. So you sort of have to understand, I think, up front, and prepare for making sure that you're doing business with with the right company, because not all high risk processors are equal. They're not all the same. They have different
Yeah.
risk profiles. So I think
No,
that's
that's a really
important.
great point. Yeah.
Yeah, and I think that that's something that you have to your point of understanding who you're doing business with and what their
Mhm.
requirements are, is a very, very critical point to that. So when we look at the sort of the challenges, um, one of the things that I think is important is that we understand a bit about risk management and compliance framework of the merchant provider, and some of the things that can go wrong. So I want to
Mhm.
get into some of those examples from a CBD merchant perspective. We know that these merchants face several challenges that, frankly, can lead to losing their merchant card processing capabilities. So, what are some of the biggest mistakes that are made that need to be avoided
By the merchant themselves?
by the merchant? Yeah.
So for the merchant, it would definitely be failing to establish an open chain of communication with the provider that they're using and failing to have the right technology in place. So the last thing they want to do is, like you said, add a Delta 8 product to their payments ecosystem, and the next thing they know, their entire merchant account is shut down. And that's what seems to be happening the most in that space, is that it spooks somebody or scares somebody away from continuing to provide merchant services, and that certainly is a challenge. But in addition to that, I think one of the biggest challenges for the merchants in the space is just finding a solution that allows them to actually run their business like other businesses do. They have to put way more attention into finding a payment processor that will work with their business. And if they're trying to find something that allows them to sell in an e-commerce environment and also sell in store, that's incredibly difficult as well. And so making sure that they have that open chain of communication and knowing who they're partnering with for their payments is is the foundation that they need to build on for success with their CBD based company.
Yeah,
And
I
then
think.
also just avoiding products that are questionable. I mean, it's like if a product has a lot of scrutiny around it, maybe just think twice about offering that product.
Right.
I think,
It's
yeah.
interesting. I had the opportunity, I think it was last year, that I looked at one of these extended due diligence reviews that gets done by a payment processor, really by the bank behind the scenes. And what they do is they hire people, they have people that will do these regular reviews, maybe twice a year, but they're actually combing websites of these CBD companies. And one of the things that they're making sure of is that you have things like age verification requirements, that
Mhm.
you're not mislabeling products or not providing necessary disclaimers on the website. I mean, these are things that I think a lot of companies don't think about. And what's interesting about it is I don't think when you go through that list that they're looking for compliance, that they're sharing necessarily with the merchant that, hey, we're going to be looking for these things. And it's sort of, I never understood, like, why? Like, why shouldn't they know the rules of the game, up front, so that they don't accidentally cross over this and end up making a
Yeah.
mistake? Because we've also seen where, you know, um, selling products that aren't categorized correctly, and it was just an erroneous error, right, could lead to compliance issues and account termination. And, the other thing that we've seen is they're actually looking for unsubstantiated health claims. So we
Yeah.
think that just the FDA is looking for that. you
Yep.
know, no,
Yeah.
not just the FDA, believe it or not, the payment processor. And I had somebody say, why would the payment processor care? And I said, well, first of all, if you're making all sorts of claims, it's going to lead to chargebacks. If they get it and say, oh, all this CBD is going to help you lose 20 pounds in the next, 4 weeks, and, you got fatter, I'm going to return the product, right?
Yeah.
Not
Well, I
that
think a
I
lot
had
of
a
people
personal experience with that or anything.
I think a lot of people don't realize that payment processors have been pulling in as parties that are enabling consumer illicit consumer behavior to happen. So or patterns against behavior. So payment processors have been pulled in for facilitating like fraud or allowing these behaviors to happen. So if you are a payment processor and you underwrite a merchant account and their website is just only products that are offering claims that just aren't substantiated, right? You actually get in trouble as a payment processor for having that merchant account up. So they have a
Mm.
responsibility and a liability to make sure that your products don't have those claims. And I think a lot of people don't realize that that responsibility falls on the payment processor. And so they certainly do need to take it seriously. And I think the reason that sometimes they're not notifying the merchants right away is because the payment processors are still evolving these compliance programs themselves internally. So when they onboard and underwrite a merchant account, they're looking at that merchant as a point in time. They then go back and say, okay, wait a minute, we're supposed to have ongoing monitoring of everything that the merchant has onboarded. Oh, we're actually supposed to review the labels. We're supposed to review the claims. And they start to realize and heighten the intensity of their oversight within their program, and then the merchant gets caught up in that. So because they're kind of scrambling to keep up with the regulations and understanding what they need to do to make sure that they're protecting their licensing.
Yeah, that's an interesting point, because I think what has really been happening is, the CBD industry, I mean, is relatively new. I mean, it's
Yeah.
been around a while, but relatively new, because it was only in 2018 that the Farm Bill was passed, and that's when CBD really started to take off on a more mainstream basis. So if you think about it, it takes a little time for some of these regulatory frameworks to even catch up. So what I have seen, and you and I have talked about this before, is that it seems to be that the scrutiny is getting more intense, particularly as that industry is now starting to bring out products that are, frankly, closer to marijuana. There's psychoactive THC products like Delta 8 variants, and there's a lot of state controversy around these things. And then, we're also seeing new products hit the market, like, kratom and
Hmm.
peptides and these kind of things. And it's interesting, as you see all this happening, you're seeing these companies sort of tighten up their reviews, and some just getting out of the business altogether, but others just saying, look, we need to really tighten up our regular extended due diligence reviews. And a lot of these merchants have no idea that they're behind the scenes looking at these things. So that is, when you look at the platform guidelines, and I think that when you don't adhere to these things, you're running the risk of all of a sudden being shut off. And we've talked to many merchants, by the way, have come to us and said, help, how can you help us?
Yeah.
Because literally, like that, they lost their payment processing business and they couldn't sell online, and that's a big problem. So I think you agree, because we've talked about this, that the scrutiny is sort of intensifying a bit.
Yeah, but I think we need to differentiate between what we would consider a really good merchant, like a good business owner who has every intention to do things the right way and truly believes in their products and the health and wellness benefits behind those products and wants to be compliant. They want their labels to be compliant. They
Mm.
want what they're advertising to their customers to be what actually represents their product. They don't want problems with the FDA or the FTC, right? They don't want problems with their payment processor. They just maybe don't have the knowledge or the expertise to make sure that they are fully compliant 100% of the time, unless they were to implement, technology and tools, which Credible certainly offers. But you have the other merchants in this space, right, who are very aware that their claims are misleading, that the products don't do what they say that they're doing, that they're enrolling merchants into uh, forever subscription billings that are hard to cancel. And so, unfortunately, what happens also is that you get these really good merchants that are lumped in with these other merchants, and they're looked at relatively the same by payment processors. So again, that's where it's understanding if you partner with the right payment processor and you have the right tools and solutions in place from the get go, from day one, you're going to know that your payment processor is actually taking the time to differentiate between those good merchants and those bad merchants. Because somebody who actually provides merchant services in this high risk space or highly regulated space, what is what we like to call it, right? So if you're partnering with a bank, or an ISO that works with a bank that is very aware of the fact that they're onboarding CBD merchants, or even peptide or nutra merchants, right? They're also not going to risk their entire program when they know that they're providing a service to a much needed market within the US. They're not going to risk their entire program over a couple of merchants that are going to be up for 3 to 6 months, making as much money as they can and then running. They want those long-term partnerships and relationships as well. And they know that the regulators are already looking at them with with a magnifying glass because of the verticals that they serve. So your safest bet as a merchant is to go with, a payment provider and a bank that really specializes in these highly regulated verticals.
So in this case, they look at it as a couple bad apples could spoil the entire bunch, right? And shut off the pipeline of the money, right?
Well, yeah, it changes how they view the similar accounts in that same like MCC category, merchant category codes. So if they're having problems with Nutra or problems with CBD, they're going to lump all of the merchants in together unless they specialize in those verticals.
Right, right. That makes sense. And so I think as we look at this, it sort of begs the question is what are some of the best practices to avoid some of these things? And I think that there's a responsibility on not just the merchant side, but there's a responsibility on the technology side, to guide and to assist with the actual merchant to keep them sort of in good stead. And there's a reason I'm saying that is because obviously we have a solution for that.
Yeah.
But I want to talk about sort of those important things that are that should be really helpful to the merchant as to help them avoid this bad event in the future.
Yeah, and I think that doing proper technology vetting when you're a merchant actually lets you know if you chose the right partner. So one of the things I loved when I was viewing Credible's platform is that if a merchant sets up their e-commerce store using you're using Credible's platform, right? And they go to add a new product in there, it doesn't let them sell that product to a consumer until the COAs have been uploaded and validated. So that serves two very important purposes. One, the merchant knows that the rest of their business can stay up and running and they can sell all of their other products until that other one is validated. It doesn't shut their whole business down. And the other purpose that serves is that the processor or the bank knows that every product that is actually running through that merchant account is a validated above board product with labeling that passes, ingredients that pass, COAs that pass. All of that is validated through Credible's platform. And so that provides this amazing, like the banks could sleep at night, right? Offering services to merchants in this vertical. And this is why a lot of banks don't get into this vertical is they're like, how do we know somebody's not going to add a product at a point in time that isn't compliant? Well, Credible system completely eliminates that concern from happening. They can show a regulator, hey, 100% of our merchants are selling compliant products. Here's how we know how. 100% of them are using Credible's platform, and they can only sell these products if they're compliant. So if a merchant is going to get set up and somebody doesn't have that infrastructure in place to manage their products properly, they may not be choosing the right partner.
Yeah, and I think that's important because we've seen a lot of people get kicked off of Shopify. And by the way, Shopify
Yeah.
is a great platform. There's nothing wrong with Shopify, if you're selling online cookies and, other things. But
Yeah.
Shopify is not designed to have those compliance guardrails to assist the actual merchant in doing the right things. And when I looked at that and we were building that, it was not only about making sure that they can set the guardrails, the age gating, all those things that
Hmm.
are important, and the disclosures, and we can't sell this product in this state because it's illegal, those types of things.
Yeah.
That's all. I mean, I think table stakes that exist in our platform. I mean, I take it for granted that it's table stakes, but These other platforms don't have it. So any good highly e-commerce platform for highly regulated industries needs those things. But I wanted to take that the step further, and you and I have had a lot of discussions about this. Is that, I never understood if somebody is being judged in compliance by a critical provider like a payment provider,
Okay.
then it should be fully transparent as to what it is the rules of the game are. And I'm not saying that the merchant provider doesn't say that, because when they're underwriting, right, they're telling you up
Mhm.
front, this is what we do, this is what we don't do, here's our requirements. And some of these merchant processors have created something called like attestations. And I sort of laugh at that because I call it the
Yeah.
pinky swear document. Like, oh, I
Yeah.
swear I'm not selling that stuff. I swear I'm not doing that. And I did actually run into a merchant last year, and they were showing me their website, and they have this feature for hiding product. And I said, "What's that for?" And they said, "Oh, if we know there's an audit going on, we can take that all of a sudden, remove it off the website." And I'm like, well, and I'm like, so clearly that was a merchant who was trying to hide something, right? Because they didn't want to get their payment processing shut off. But to me, provide what it is, everything I saw in this extended due diligence review, I looked at and said, okay, we need to build that into our platform. So
Yeah.
we have a health check, an ongoing health check, which, by the way, we wrote these bots, and we use our AI engines to essentially grab all the regulations from that state, and what's allowed, and the guidelines from the merchant bank. So as we're going through, we're combing the website, and this doesn't have to be Credible's technology. You could be using a WordPress site, and we will go through and give you a health report and provide that access to the merchant processor if it's going through what we call Credible Safe Commerce, to say, look, you can't do these things, and if you keep doing these things, you're going to get shut off. Now, if you're using the Credible e-commerce system, you won't be doing those things because those controls are already built into the platform. But if
Yeah.
you're using one of those platforms that doesn't have those controls in, we're basically, we can look at that. And, I know that some companies will hire people to go through their website, and I'm not talking about from the merchant processor side. I'm talking about from the merchant side. Are we, doing everything right? And they'll go through this painstaking process to review all those things that technology does in minutes. So I think, from the perspective of choosing your partner right, up front, I think it's choosing the partner of merchant processor, but also choosing the technology
Yeah.
processor that I think is critical. And one of the other things that I've seen is, the FDA, they will send you a naughty letter if you're doing
Mhm.
something wrong, right? And I heard somebody say, well, we just fix those and it's no problem. Well, it's no problem until the FTC gets involved and gives you fine, fees, and penalties. But the other thing that's happening is, when I looked at that extended due diligence review, they're actually looking at the FDA website to see if the merchant has been, slapped on the hand. So it's part of the merchant processor's due diligence review to check these other sources, which we also automatically do, but they're making sure that you're not on the naughty list. So that has a lot of implications. And I've been seeing this sort of step up considerably from these merchant processors. Do you think that's going to get more intense going forward?
I mean, yeah, it's certainly not gonna slow down. So there's a lot of movement when it comes to regulatory compliance, and there's more and more people wanting to get into the space and provide merchant services as well. And as we've seen, CBD is not going away. Neither is Nutra. There's a big push, and again, it's the balance between. Also, I want to clarify here again. You've got the really good merchants who want to do the right thing, and then you've got merchants who are just trying to make as much money as quickly as possible off of products that really shouldn't necessarily be on the market or marketed the way they were. And so making sure that the banks have a way to oversee the merchants who are these good merchants and have those tools in place like Credible offers makes that relationship and managing the regulatory compliance concerns so much easier for every party involved. And so I think that again, not think, I know I've seen it. is when banks or ISOs get into this space and they don't realize what it takes to properly manage these merchant accounts, they're kind of scrambling and catching up, and the merchant gets caught in that. Because they're now like, oh, wait a minute, have we validated all these claims? Do we know the products they're selling? How do we catch up with this? And they're doing some level of web monitoring, web crawling, attestations. Those ones crack me up. Um, we had the guy sign here. He promised he wasn't selling Kratom and through his merchant account. He has it in the store, but not a single Kratom sale goes through the merchant account. It's like, okay, you really can't prove to a regulator that that is what's actually happening. And I don't see that as a solution at all. Technology is the solution because technology provides consumer safety, consumer confidence. It provides the card brands with confidence about what's running through, the payments ecosystem. It provides the regulators confidence. It gives everybody a peace of mind. And so technology really is the solution here.
Well, it's interesting because you talked about sort of the brick and mortar store, so they might not be selling it online because it's showcasing the bad product that they shouldn't have, but yet
Yep.
they're selling it in the store. Now, Qredible now has an integrated point of sale for brick and mortar along
Mhm.
with the e-commerce, and all of that is visible and transparent. So, um, it's not a great thing if you're trying to do the wrong thing, but if you're trying to do the right thing and stay in compliance, we actually know what the inventory is on the shelves
Yep.
through the brick and mortar point of sale, and we also understand what the inventory is within the obviously the e-commerce, because it's all happening from one product set, and we know where that is. So that's another critical thing is this whole product navigation. And COAs I think is sort of misunderstood by a lot of the industry. Like, they think that if we just provide a COA up front in the underwriting process, then we're good to go, right?
Yeah.
But
Yeah.
what I've noticed is a lot of these merchant processors have requirements, and when you ask them what's the biggest headache for them as far as these reviews and these audits, it's the constant COA process, right?
Mhm.
That they have to get a hold of, and it's hard for them to really keep that under management. So what ends up happening, and this is actually one of our customers who was complaining about the fact that before they implemented our technology, that they were constantly getting pinged by the bank for new COAs because somebody was going on their website, seeing a new product, or seeing that a COA, an existing product, was old. It was, a 15,
Yep.
18-month old COA. And a lot of these companies have the requirements that you have to have a current COA, which is no older than 12, 15, or 18 months, depending on who the merchant processor is. So what these people were complaining about is, oh, that merchant processor is constantly dinging me. I have to stop what I'm doing, and I have to
Mhm.
provide them that information. So I think this goes back to tying in the technology. But if all that information is transparent and available, there's no reason to stop what you're doing because the merchant processor already has an update. Now, if you happen to forget to put one up, our system will remind our customers that, this COA is 18 months old, and you're running the risk of having an issue with the merchant processor. So you can automatically then upload that, and that will stay current. What are some of the other things or sort of challenges that you see in this high risk, highly regulated merchant processing space that needs to be navigated?
Well, actually, I want to add to what you were saying first about the COAs on file. So, one of the things that we already kind of brushed on was that if a merchant doesn't have updated COAs on file and their processor is constantly pinging them for it, the only recourse that the processor typically has, if they're not using technology that gives them other options, is to eventually put the entire merchant account on hold status. So, where the merchant isn't getting funded at
Mhm.
all until they send those COAs in. And then that creates, extra workflow for the payment processor. And if the merchant still is not able to provide that documentation, then they have no choice except to shut the merchant down. And so, where with the right technology in place, the merchant simply just isn't able to sell those products that haven't been validated as compliant. They don't have to lose an entire processing relationship. Again, just mutual benefit across the whole chain here, from the merchant to the payment processor. and also then even the point of sale and just the ease of use for the merchant and the insight that the payment provider has, within the merchant's business. And I
That's a
think, yeah.
No, that's a great point. I love that. And because part of that comes in at the underwriting side, right? So we have to know what your products are, and we have to have the
Mhm.
COAs with those products in order to get approved for a merchant account. Now, what I've noticed is that process can take a very long time to get approved in the underwriting side. And one of the technologies that we developed is I call it a product reverse engineering technology. That's not the marketing name, so don't get crazy, Joy. It's that would be a bad marketing, the reverse engineering product. But what it really does is it enables a a merchant to just upload all their COAs, and then our technology automatically reads those COAs using natural language processing and will create a list of products and variations of those products off of those COAs. So they don't have to sit there and type through every single product or upload every single product. All they have to do is send the COAs, which they need to send anyway for underwriting, and then we reverse engineer the data out of it to say, okay, and here's the products that are listed. So, what are you seeing as far as is that one of the roadblocks to onboarding that you're seeing in the space?
Well, I don't think it's a roadblock to onboarding. I think it's a roadblock to payment providers wanting to even get into the space or not, not
Mm,
necessarily a roadblock
yeah.
to onboarding. And I also think that another point to make here about what merchants can do to really protect themselves is if the person that you're partnering with is saying, just don't talk about how you sell these products or sign this attestation, you're not selling them through your merchant account, they're not the right long-term viable solution for your business, because that means that they're not having open communication with who they're processing your payments with, right? So actually every single independent sales organization out there offering merchant services, and even the big out of the box solutions that we know, there's sponsorship involved from a bank. And so if they're saying, hey, just don't talk about these products, it's regulatory compliance, we don't want you to get shut down, just hide what you're doing, you're not with the right payments partner, because there are institutions out there who will provide you with a merchant account knowing that you sell CBD. So it's really, really important that you take that in consideration when you're filling out that application and you're giving them the information about your business. Anybody says don't talk about what you're selling, you're not with the right partner.
Yeah, but that's going to catch up to you. So because behind the scenes, they're doing these audits. So when they have people literally going through your website and looking
Hmm.
for this stuff, it's, so you may get approved right up front,
Yeah.
but it's eventually going to catch up with you. And that's where the danger is in getting sort of shut off. So, what are some of the other challenges or recommendations for choosing the right payment processor and things to stay away from?
Well, I think one of the challenges is just continuing to navigate the regulatory landscape. And in addition to picking the right payment processor, it's also knowing that you have some flexibility or options with your distributor, your fulfillment company, anybody who's responsible for your marketing, your labeling. That all feeds into kind of the payments ecosystem and what they're looking at, because you want to make sure that if you don't have control over the labels, right, you're picking a partner that's just private labeling everything for you, and you're not getting regularly updated COAs from them, then it's going to be harder for you to manage your business effectively. There's just a lot that needs to be taken into consideration from a business owner, but I think that by utilizing a platform that helps them navigate these challenges, they're setting themselves up for success.
Interesting. Now, one of the other things that I've seen as practice out there with some of these merchants is they will have more than one merchant processing relationship. One I saw actually had like four. And is that like frowned upon in the industry, or because it seems to be common, like if they're going to get shut off by this one, they can almost quickly switch everything to another. And some of them are, we've had people ask us, do you have like a load balancer? And I'm like, what's a load balancer? That means something different in technology than merchant
Yeah.
processing. But can we send this many transactions to this one, this many transactions to this one? And then they're asking me about things like split transactions. So we have this processor that won't allow these products, but this one will. So in your shopping cart, you've got a naughty product and you've got, a regular product. I mean, it gets into a little bit more complexity. So what are your thoughts around that?
I mean, if the merchant's asking you if they can direct products towards a payment processor that will allow those products versus not, that's a little bit more of a valid question, I think, than just outright, hey, can you load balancing? Load balancing, you really need to look more into the reasons behind the load balancing. If Again, there's a lot of merchants that intersect in this space, right? You've got the merchants who are trying to do things the right way, who have been burned by payment processors because they chose the wrong partner. But you also do have merchants that are trying to burn the payments processor and offer products that are not valid products in a way that is misleading to consumers. So it's making sure that we're partnering with those merchants who want to offer products that aren't doing harm, who want to be transparent with what they're putting in the marketplace, who want that open communication and relationship with their payments processor, right? And so sending, products to a payment processor that they will allow versus one won't, there's obviously reasons behind the scenes that we don't necessarily know how they came to that decision. There's reputational concerns, legal concerns. They run their own risk. They have their own risk enterprise management, so they're running those numbers themselves internally to decide what they're going to take and what they're not and what the exposure is. And sometimes it comes down to the people on the board just don't like those products. They might say, you know what, we don't like those. It's a personal decision, but that's not going to be relayed to the merchant. The merchant's just going to know, hey, this bank won't take these products. So as long as they're aware of what products their payment processor will or will not take, and they have the technology again to make sure that they're meeting the requirements of each of their payment processors individually, and then also complying with the regulations that oversee their products, we're all setting everyone set up for success.
So do you see a difference is the challenge any bigger or different for a small merchant versus a larger merchant in dealing with these things?
I think it's more challenging for the smaller merchants to an extent, because the smaller merchants, unless they know that a technology like Qredible exists, they're going to have a really hard time finding a comprehensive solution. I mean, there's a lot of, small local CBD businesses out there, or health and wellness clinics offering, CBD products or other health and wellness or neutral products that end up getting their merchant account shut down, or they can't sell online because they don't have the right solution or technology in place.
Yeah, because some of these companies, I know they have compliance folks internally, some of the larger
Yep.
CBD companies, obviously, and they're looking at these things. They're scrubbing the websites, and it's one of the benefits of what we provide is we basically provide that compliance officer in a box. We're using artificial intelligence and machine learning and advanced technologies and blockchain and
Yeah.
to basically handle a lot of this and provide a comprehensive report of where you might be steering wrong, which is helpful, I think, not only for small companies but large companies as well, because even like a point in time audit, you're only doing that in point in time, but things are changing on these sites and these products, and marketing may very innocently add some things to the product or onto the description of the product on the website, and all of a sudden they just put you in trouble because it wasn't approved through compliance, or there was a
Mhm.
hurry to get that product out there. So one of the things I think is important is this concept of active and constant monitoring
Yeah.
of the site, of the technology, of the product set, to be able to literally have a high definition view of your entire enterprise and have eyes on the back of your
Mhm.
head, which is what you really need. Because a lot of what I've heard from some of these merchants that got shut down, they had no idea why when they got shut down. And when they found out why, which sometimes they'll tell you and sometimes they won't, but when they
Mhm.
found out why, they said, well, look, we didn't mean anything by that. We didn't even know that that happened. Right. So I think, ignorance is not an excuse to these things. And again, I want to stress that we can't make the merchant processors the bad people in this.
Mhm.
They are protecting that pipeline of money. That pipeline of money goes all the way back to the bank, right? That's providing the money through this pipeline to go, to essentially effectuate this transaction. and that bank is required to follow the rules and regulations, and they're expecting that transparency. So a lot of times when these merchant processors end up shutting you off, it's because they're in protection of that pipeline to the bank, or they may have gotten dinged by the bank because the bank
Hmm.
recognized through the extended due diligence review that this doesn't look kosher. So this has to be rectified. And sometimes they'll allow you to fix it, sometimes they don't. And everybody's protective of that pipeline of money. So I think a big part of the message, because you've talked about some of these merchants that are trying to hide things, or even some merchant processors that are trying to
Yeah.
sneak one by the goalie here. And but I think that the key thing is it's not a good mid to long term strategy, because it is
Yeah.
eventually going to catch up to you. So I think that the key thing is this: having a transparent and trusted relationship with your merchant processor, so you're doing the things that are necessary to keep them out of trouble, and vice versa, right? That it seems to be a two-way street. Did I oversimplify that, or?
No, it's definitely a two-way street, and that's, goes back to what I was saying. If your payment provider, if the person you're signing up with on the application says, "Yeah, you can sell these products, just don't advertise that you sell them," or sign this attestation that they won't run through the merchant account, but you can do it.
Yeah.
It's not a long-term viable solution, because that means that they're onboarding accounts without transparency to the sponsor bank that's behind, those merchant accounts. Now, the sponsor bank should have, and that's where a lot of trouble comes in, because the sponsor banks do have oversight over the ISOs. They have end liability. So if, all of a sudden this merchant gets set up and they thought they were fine, and then they get a notice that they're being shut down, it could be because they were onboarded improperly, and the sponsor bank then finds that merchant in their ISO's portfolio and requires that merchant to be shut down. And the merchant may not be selling anything bad. It might be a really great CBD product that has the proper COAs and labeling and passes all of that, but the bank just doesn't take CBD, period. So if they find CBD, they're gonna shut your account down. And again, that's where it can be confusing for merchants. Like I said, you can walk into, a local big box retailer and you can buy CBD products, but yet your merchant processor just shut you down because you started selling a lotion with CBD in it. It's very confusing to business owners.
I probably should have asked you to do this in the beginning, but I think it'd be helpful if you sort of define what is an ISO, right?
Sure.
And what's their role in the world, and talk a little bit about that supply chain, that payment supply chain, and explain it in as easy terms as possible.
Yeah. So there's acquiring banks who are registered with the card brands to be able to acquire merchants. There's issuing banks, which is on the issuing side, where they issue credit cards to the card holders, and then you obviously need the other side of that, which is the acquiring side, and that's where they're agreeing to issue merchant accounts in order to accept credit card transactions at the point of sale. So essentially, every single merchant out there is getting a micro loan. They're getting funded on transactions within 24 hours that hasn't been technically paid by the cardholder yet. So that's where the acquiring infrastructure comes into play. So acquiring banks are allowed to underwrite independent sales organizations, where they license those organizations as well to offer merchant services. And so these independent sales organizations are able to go out and market the program within the parameters that the bank set for them, directly to merchants. And every bank has set up their program differently. So some banks give their ISOs a little bit more control and oversight than other banks do. But at the end of the day, the bank still is the one who developed their acquiring program, and the ISO needs to adhere to that acquiring bank's program.
So I like to sort of liken that to the 30 years I spent in the mortgage industry, and there was this designation called in correspondent lending, which was sort of like this ISO world, where there was
Yeah.
delegated and non-delegated responsibilities. So if you had delegated responsibilities, that means you were allowed to do certain things on behalf of the bank, right?
Yep.
Because they trusted you to do that. And if you had non-delegated, then essentially what was happening is you're really just a sales organization. So you're taking the app, you're servicing the account. So you're a sales and service organization, but you're not doing any of that underwriting or that risk management per se. But you got to make sure you're getting getting the account set up correctly and all that. Is that a good parallel of how that works?
That's a good parallel, but even if you're a delegated independent sales organization where you're doing that underwriting and risk management internally, you still have to adhere to the bank's risk management infrastructure. So if the bank says no CBD, and even if you are a delegated ISO, you can't onboard CBD. That's just the way that it works. So you might be doing all of your own risk and underwriting internally, but the bank still has oversight over you as somebody who's underneath their umbrella, regardless of how much they delegate out.
And how about, so that's on the underwriting side. How about on the ongoing sort of monitoring and risk management side? Where does that responsibility lie?
I mean, that responsibility lies again, this is it varies bank to bank. So there is some delegation of responsibilities within the bank's ecosystem or within the bank's programs that they offer. And that would be getting really into the variances between those different contracts. But the the ISOs are responsible for the day-to-day, unless they're not doing any of the risk and underwriting. The ISOs are responsible if they're a delegated ISO, for example. They're responsible for the ongoing risk monitoring and underwriting, but there's still some oversight from the bank.
So if we look at this sort of in the supply chain, if the ISO is messing up, the ISO can get cut off by the acquiring bank.
Yes.
If the acquiring bank is messing up, they can get cut off by the Visa, MasterCard, American Express, right? I mean, that sort of how that works?
That is how that works, but also I think these responsibilities flow in all directions, right? I think that the banks also have a responsibility to the ISOs to be very transparent with their risk management protocols and with how they're managing their programs. So I think that sometimes that's the reason as well, is there's not a lot of transparency or communication, or the communication isn't forthcoming, or might be handled in a way that wasn't necessarily efficient, from the banks to the ISOs. So sometimes the ISOs are caught in the middle where they're not getting clear guidance from the sponsor bank. And then the merchant, of course, can be a byproduct of that.
Well, is that a secret? Is it a secret what they're doing? Like what they're looking at? Why is it a secret? Like, why can't we all know
Yeah.
what it is that you should and shouldn't be doing and what they're checking for? Ultimately, we're trying to control risk.
Yeah. I think what they are and aren't looking for to an extent is relatively common information. It's just that every bank and processor out there has their own risk appetite. And what happens is the merchants are getting caught in and people trying to onboard or do things maybe that they aren't supposed to do, or the bank's not even knowing what they want internally, right? There are definitely some acquiring banks in the space who could use a little bit of improvement in their own programs where they haven't come out with clear communication on, what they will or will not allow on the portfolio, or they have selective enforcement of those rules. And again, the merchant is just, ends up being the victim in these cases, or the ISO ends up being the victim. There could be an improvement across the board here, transparency and improvement from everybody.
Yeah. See, and this is what I never understood even on the mortgage industry. And many years ago, I started saying that, look, you've got these people that are originating loans and selling loans to somebody who's buying that loan, right? Who will eventually securitize that loan. And there's two different reviews going on. There's the one before we sell the loan, and there's the one before we buy the loan. And extensively, they should be the same thing, right? Because if we can validate that we're all looking at the same stuff and that we're checking the right boxes, and then it should all match up. And that's not how that happens. So it creates this very inefficient risk management framework. And here, I think we have a more unique opportunity to solve this problem of, these guys are looking at this, which means you ought to be looking at this also. You ought to be making sure that your business is staying in compliance with these merchant guidelines. And so it's definitely more transparent than it was that I saw in the mortgage industry, and a lot less, as far as I'm concerned, complex. But there has to be a way for this to check through so that we're constantly doing the analysis on an active basis. And that is the basis of credible, safe commerce. That's the entire, basis of saying that, look, it's about transparency and trust through risk management and active monitoring that's tailored for these highly regulated industries, so that in the technology, we could be putting those guardrails up and making sure that you have the training wheels on to make sure you're not veering off, and falling down. And that's
Yeah.
that's really the key things. Is part of that is that ongoing monitoring of verbiage on the website, that ongoing COA management, all of that. So, this is why we exist, and it's really about reducing the cost of compliance to both sides, improving that transparency, and most importantly, avoiding what could be the inevitable, the bad thing, which is getting shut off, losing your
Yeah.
merchant processing account. So, this is a very unique solution that we've brought. Nobody else is doing this. And it's very, very affordable, but I wanted to put that solution out there, because I've seen too many of these companies getting shut down. And literally before we started Qredible, we were offering consulting services, and one of the companies that we were consulting with got shut off, and
Yeah.
we had to solve the problem for them. We had to go to the merchant processor, and then we had to help them put a framework in place that stopped that from happening, which is what led to these ideas of automating these things through the technology. So, Angela, before we sign off, I want to give you a little bit of an opportunity to talk about the work you're doing in the industry and how you're helping companies navigate these complex issues.
Yeah, absolutely. And I actually I want to add one more comment about Qredible. I think one of the big differentiators that are the points I really want to get across is that when merchants get shut down because of how their website is set up, that could be because the bank just simply doesn't have the appetite for their business type, period, end of story. And I think that if banks would take into consideration what Qredible has to offer, a lot of banks who are scared of entering the CBD space would actually see it as an opportunity, because they would know, again, without a doubt, that every product the merchant is selling meets the regulatory compliance requirements for those products to actually be able to be sold off of these merchant shelves. And the point for the merchant is what technology is being offered to you when you're signing up for this merchant account, so that you know that the payment processor you're partnering with is taking the viability of your merchant account seriously. Because that's where this ends up happening, is you're gonna have merchants who continue to get shut down because the bank, just period end of story, doesn't want these type of merchants. And we're never going to convince every single bank to move into this space. But the banks who do want to move into the space should be using technology that solidifies that relationship and creates transparency in the relationship with the merchants.
Yeah.
And so, and also wanted to mention, because I don't think we said it, Qredible is the only omni-channel e-commerce point of sale solution I've seen, in the CBD space, which is very valuable, especially to the SMB market within CBD. And as far as what we are doing, thank you for asking. So we've been working a lot in the BSA AML space right now, providing BSA AML frameworks, BSA AML assessments, and then also helping with risk management. And we like to take an operational approach to risk management. So I like to say anybody can write a good policy, but it's how you put those policies into place, how you implement those within an organization. Do you have the right procedures in place? Do you have the right controls? And another gap that we've been seeing very consistently is, how are you making data-driven decisions when it comes towards your risk management framework? Do you have the right key risk indicators in place? Are you looking at the right data and the right information? And are you able to make proactive decisions to continue to mitigate risk within your organization? And so we've really had a lot of fun, because I actually am probably one of the few people, I don't know though, a lot of people in compliance seem to think it's fun as well, but I love compliance. And I love really helping merchants set up robust frameworks that are scalable for success. So I've had a lot of fun in helping out our clients.
Well, you've been an important partner to Qredible, because you do a lot of the work that Qredible doesn't do, which is that consulting angle, and it's helping them sort of get set up. So Qredible's not a consulting company. Qredible is a software company, but we work with a lot of consultants. And Angela is one of those people that we work with and promote in the payment space. And it's really been a pleasure, because you've really helped us in even guiding our products and helping us understand more about what's going in the market. As my team knows, I always say, look, if I'm the smartest guy in the room, we're in real trouble. So it's important that we always have people smarter in these disciplines that are part of this incredible, Joy's going to like that, incredible ecosystem. So this has been great. Always love talking to you, Angela, and always new ideas and great ideas come out of our discussions. And I look forward to our continued partnership and work together. And Joy, I guess this kicks off our new season, right? This webinar. So we'll be back on Fridays at 3 p.m. with our half-hour broadcast series. And Joy, can you pitch our podcast as well and where folks can find that?
Yep, we would love for you to catch up on season 1 if you missed out on it. We've got it up on our website. We've got it anywhere you listen to podcasts, so Spotify and all of the good places. And happy to let you catch up. Season 1 was jam-packed. I think we had over 20 episodes and tons of leaders in the cannabis, CBD, finance, legal, regulatory, just pulled in a lot of thought leaders from a lot of places. So our goal is always to elevate the voices in this industry who are making a difference, who are doing things the right way. This is going to be how we all grow. So definitely catch up. We'll make sure there's plenty of information in the comments about Angela's work and how to get in touch with her. And we look forward to being back every week.
Awesome. Well, thanks, everybody. And we'll see you next week on the live broadcast, Friday, 3 p.m. Eastern, 12 Pacific.